Hello, chart watchers and DecisionPoint faithful. Welcome to this Friday, January 25th edition of DecisionPoint with Carl and Aaron Swenlin. For those of you joining us for the first time, welcome to the show. We hope to see you back next Friday. And for our regulars, welcome back. All right, what are we going to cover today? We have quite a bit. First of all, I'd like to welcome my dad, Carl Swenlin. How are you doing today?
Doing very well.
Yes.
Greetings to everyone.
Yes. All righty, let's go ahead and get started here. All right, we're going to go ahead and we're going to look, it's the end of the week. So what we do is we go over the daily and weekly charts. We'll look at the small, mid, and large, mid, and small caps, the big four. Carl's going to go over those with you and what he's seeing. And then we're going to look at our decision point indicators. We have our climactic indicators, short term, of course, the Swenlin trading oscillators, and then the ITBM and ITVM. Those are our intermediate term indicators. And for our bonus at the end of the show, if you stick around, Carl's got a chart of the NYA that is telling us some interesting things. And then we also, if we have a little time, I'm going to show you one or two sentiment charts, give you a little preview of what you'll see Monday on Market Watchers Live when I do the sentiment report. All right, let's start off by looking at the decision point scoreboards. As you can see, short term, we're still looking at green buy signals. Intermediate and long term don't look quite as good. Just as a refresher, the trend model signals for the short, mid, and long term, these are all found on the daily chart. And these are dependent on the crossovers of the 5 and 20 day, the 20 and 50 day, and the 50 and 200 day EMAs. Now the PMO signal's a little different. Short term, we get that from our daily chart. Mid-term, we get that from our weekly chart. And long term, we get that from our monthly chart. All right, so like I said, still looking pretty good in the short term as far as our signals are concerned. One of the things I will point out to you that we talk about a lot right now are these long-term signals. And you can see in November and December, we got those sell signals, and, you know, that really tempers what we're thinking about as far as the short and intermediate terms. So we'll go over some of those charts and give you our thoughts on that. All right, as far as the decision point sector scoreboard, we did get a new buy signal. Last week, we got the real estate buy signal for the intermediate term trend model. And now we're looking at the consumer discretionary. And they have just gotten, that sector has just gotten an intermediate term trend model buy signal. Remember, that means the 20-day EMA crossed above the 50-day EMA. One of the things, yeah.
By 1/100th of a point today.
That's true. It's a barely. And so that's one thing, you know, to mention though, Dad, is the fact that, you know, sometimes we'll get these signals, and if they're very thin, if the margin is really thin, we could see whipsaw very easily. So, you know, on Monday after trading, we may just see that buy signal disappear on us. But for now,
well, you just remember though, the EMAs are very consistent. If the price remains above those EMAs, then the signal will deepen. It'll get more firm.
Right.
So yeah, we'll see. I think that it'll just. I think that it looks pretty well at this point.
All right, that it's going to stick around. We'll look at that chart too. In fact, let's go look at it right now since it's time to go to all of these lovely charts. Okay, I'm going to go over here and pull up XLY just so we can get a picture of what that signal looks like. And there you are. So like my dad said, it's, you know, the 20 is just above that 50 by, you know, 1/100th of a point. So it is really thin margin. But also, you're right. I mean, we should explain is that with the EMAs, as long as the price is above, you're going to see them rise. If it's below, it's going to turn. So at this point, we do have price up there pretty much on that gap. It's well above that 200-day EMA. So that signal should stick unless we start seeing more, you know, if we start seeing a new down leg, that of course.
But there have to be some, price would have to get down below those EMAs. So it's good for a while.
Yep, we'll see. All right, I'm going to go ahead and go right on into our scoreboard charts. I'm going to look at the daily and the weekly. Let me go ahead and make this a little bigger for everyone. There we go. All right, so what I'm going to point out really with all of the large caps, there's a few interesting points that I want to note. Number one is that we've been watching a declining tops trend line. This is the declining trend, right, that started back in October. And so I've been watching it to see if price will be able to get back up above it and break that declining trend. Now it's more of a shorter to intermediate term trend. And so even if we get that breakout, I know you've been saying, and I know I've been saying as well, that we could still see a rally move on up, and still be in a bear market, correct?
Right. Mm-hmm. Although, the 50 and the 200 are closing in.
Yep.
Each other. So I'm just saying that breakout above that line could be a fake out.
Right. Fake out, breakout. And looking at the weekly. Okay, so one other thing about the Dow. Notice that price, we made a new high for the week on price as far as the Dow goes. Now we closed lower than that high we had earlier in the week, but we still got a new intraday high on the Dow. Now what you'll see on the other three indexes that I'm going to go over is none of them had that intraday high. They didn't get that little breakout that we saw in the Dow. But the Dow is a little bit unique in that it is, of course, only 30 stocks. And so if one of them has a particularly good day, or really that it's a little bit more sensitive to those moves. And so I'm not totally surprised to see that. When I look at the weekly chart, there's that declining trend, and it hasn't been broken just yet. But we are seeing the PMO on the weekly chart turning up on the Dow, as well as the other three large cap indexes. I'll just briefly go through those. But here's that rising trend that we had that started back in 2016. We had the correction, looked like we might come back. Obviously did not. And as soon as we started falling after October, I know Arthur Hill, and I think you also were pretty early on with the bear market call. And sure enough, we ended up breaking that rising trend, which, breaks that, would you call that the secular or cyclical bull market?
It's a cyclical line.
Yeah. And then, we got the breakdown. And so now we're looking at a bear market situation. So we are seeing some improvement, though, in the intermediate term. So, we'll keep an eye on it. I don't think either of us are perma as far as our positions are concerned, but certainly we are tempering our expectations to the downside. All right, on the NASDAQ 100, you can see that the rising wedge is still mostly intact. We had a little bit of a breakdown, I guess you could say, but I would look at it as more of a drift. I could actually move this rising bottoms trend line, but it's still pretty much intact. Like I said, we got back up in it. I would call this really the main rising trend here for the NASDAQ 100. PMO is now positive, and that's a good thing. But like I said, okay, the NASDAQ 100 is the only one that's broken above the declining trend tops line. But we didn't set a new high for the week. So just interesting info there. NASDAQ weekly chart. And here we go. You can see the breakout above that declining tops trend line. You can also see the bottom in very oversold territory right now on the NASDAQ 100. Well, oversold for what we're seeing in the past, there you go, 7 years. Because if we did take this out, I think you'll see that it's not as oversold as it might look, right? Oh, gotta get that thing out of the way.
It can do a lot worse, can it?
Yeah, I mean, I don't even need, I can uncover that, but I don't think I need to. We know that it was a little bit lower than this low on the PMO. So not really, I mean, it's oversold in the near term, I would say, but it's certainly not impossible to see it move even lower. So that's...
Look at the, before you go, look at the, in 2008, the PMO is makes two tops.
Right there.
It bottoms. Well, actually, it bottoms first in early, and then it tops again, and then it bottoms again, and it's just a lot of the fun of a bear market until it finally turns down and it finished up.
Right. Took care of business.
And you got, if you go back far enough, we don't need to, but you'll see the same thing happen in the 2000 bear market,
right.
2001, 2.
And you can see, I mean, it's not as prevalent, as obvious on this chart because we do still see kind of rising bottoms, but I know on the S&P weekly chart, you'll see the bottoms rising on the PMO, declining bottoms on price, and that's, of course, a positive divergence. So that told us to look for a breakout, not necessarily the end of a bear market, but it certainly gave us some hint that we should see some upside. All right, let's go on to the OEX, and then I will move it on. Okay, here we go. Rising bottoms, but as I did on the S&P chart, you haven't seen that yet. We can retrace this line just on these bottoms now. And it's still, you still have that rising wedge. And the expectation, of course, is a breakdown. We basically ended that very steep rising bottoms line, which makes a lot of sense. It's very hard to keep those kinds of, that kind of acceleration going. And so not surprising when we got that pullback. And so it does make sense really to draw that as the new rising bottoms trend line. All right, we'll keep that. And then just a quick peek at the weekly chart. Again, these all being large caps look very similar. We're starting to see that PMO turning up on the weekly charts, which is a good thing. And now the ever popular, of course, S&P 500. And there you go. You can see again, there's that original rising bottoms trend line. You can see how steep that is. And it's really hard, especially I would say in a bear market situation, to be able to hold that. And we did not. And I don't look at it as this was a big breakdown out of that wedge. It was more of a drift, which is another reason I have no problem with moving. And actually, that's not, I thought we fixed this one before the show. Let's fix it now. There we go. Okay. So I think it's more than okay to go ahead and use that bottom that we saw earlier in the week as our new low for the bottom of the wedge.
One of the things that happens with steep rising trend lines is they get broken just so that the price index can set a less accelerated trend line, or trend line that's not as steep.
Exactly.
So that's what we got here.
Indeed. All right, we'll look at the weekly chart, and then I'm going to go ahead and let you take over some of the do the big four, because I want to make sure our indicator charts are completely up to date before I show them. So we'll go into that right after the big four. Again, here you go, rising, declining tops trend line. We have not broken that yet. We tried to break this rising bottoms trend line on this weekly chart, not quite, pulled back from there. So I thought that was interesting as well to note. And of course, the PMO also bottoming like we saw in the other large caps. And then real quick, let's look at the mid caps. Not going to see too much difference here, but I did notice that on these declining tops trend lines, we did get a nice little breakout on the gap. And we did set a new high as far as intraday for the week as well. So I think the 400 is looking a little bit more healthy, you want to say. And then you look at the weekly chart, and we still got that, we've got the bottom on the PMO, great to see. And, you know, we're making this rise. We're holding above this support area about 175. But, you know, overhead resistance is lying up here at 190. But you can see resistance actually is even closer, I would say, at that 200-day EMA. And for the Russell 2000, and then I'll pass it to you. Actually, I'll go look and see if those charts are updated, and then we can determine what we'll do. All right, PMO positive for the Russell 2000. It had already broken that declining tops trend line, and it did hold it as somewhat as like a support level, and then it has come back up off that. Didn't set a new high for the week, but it still looks a little bit healthier, I would say, than the large caps do. One of the things, and I don't think I've asked your opinion, but V bottoms. What do you think of V bottoms? Do you think of them as a good thing or a bad thing?
Well, I think they're a bad thing because we always look for pullbacks and retests.
Yes,
So if you get a V bottom, you get left behind if you're
exactly.
waiting for the retest. The rule is if you wait for a retest, it will never come.
Guaranteed.
If you don't wait for it, it will retest. That's the rule.
Yep, that's it. So good luck out there. All right, let's look real quick and see if these have updated for us today. Oh, look, they have. So let's go ahead and we'll look at these. Okay, so we're seeing an increase in the new highs. Still not, what the levels we saw before. Could certainly get more, but we had gotten so oversold. We'd seen so many make these new lows. It took a while before we could get up here and start making new highs. I could see that we did get, in fact, I'm going to get to the annotation tool so I can do this a little easier. And there we go. I would say these are climactic moves and not super, because I'm going to take this to show you where it actually lines up. We've had a few times where it's certainly been more climactic. So we could see more climactic moves out of this. I would say when I see these sort of climactic looking moves, what I go and do is see what we've had before that. And that will give me a sense of whether it's an initiation or an exhaustion. And so for me, we were already in that decline. We're getting the big move up today. And we didn't set the new intraday highs, but I would say that this is more of an initiation. I think we might have to go up here. We might break out above that. But we're talking, this is really short term. So I'm talking like Monday and Tuesday. I'm not talking forever.
You notice that the net AD and the net AD volume is really fading as we're going higher. So yes. I'm not so sure as I would look at it as a climax myself. I think it's even though we've got higher price, we've got less net volume and breadth.
Yep. All righty. Let's see back here. So short-term indicators are probably up. There we go. And as you can see, we're still continuing lower, even though we've had the nice move to the upside. I kind of expected these to turn up on the move today, and they didn't. So that tells me.
Yeah, I did too. And notice that you have the last two tops on those indicators. It's a negative divergence.
Absolutely.
Price.
Absolutely. So that does give us a little bit of pause as well, guys, to think about. And intermediate term, these are probably still moving up. Yeah, takes them a little longer to turn back, but they are getting into overbought territory. And I'd say really for correction mode, if you want to say we're correction, I think we're past that. If bear market mode, I would consider this pretty overbought personally.
Right, and look how far it has moved. Look at the length of the move from the bottom.
Yeah,
it's a very so it's definitely overbought.
Yep, PMO did make it in a positive territory though, like I had mentioned. All right, so let me go ahead and let's pull up your big four charts and get started with that. Let's see. All right, go for it.
Okay, you see the drop down from the rising wedge, and then a rally back to the rising trend line, and now today it's had a nice drop. And note that the daily PMO topped. Let's look at the weekly chart.
Okay, I would point out as well that this top in August lines up almost perfectly with where we came down today. I still would expect it to fail there, but just to note it. All
And
right.
here it's a better picture of the wedge in perspective. Uh, Weekly PMO is falling below the trigger, the signal line.
Mhm.
So still not a positive outlook on this.
No, definitely not. Gold. There we go.
Nice move up today.
Huge.
You know, I hate to get my hopes up on this because gold is so flaky. And of course, this move is a great part of it is due to the weakness in the dollar today. But
Yes.
look, the daily PMO turned up. So
Yeah.
maybe gold bugs are going to get a break here.
Yeah. I'm holding it, full disclosure, so I'm hoping it continues higher. I was really close to just I was thinking about dropping it because it does look like, I mean, I'll go back just real quick to the 1 year here, but you know, it went down below that 1280 mark. It looked like it was going to head lower. We had the PMO dropping. I'm going to hold on to it a bit longer. I'm going to see what happens here at 1300 if we can get past it. If we don't, we start falling down. I might rethink that. All righty.
You jumped the weekly on gold.
Uh-oh. There we go.
Okay. The see, this is one of the reasons I didn't think it was going to pull back as much, you know, as back to say 1260 or whatever, because you had the rising trend channel there, which really was a reverse flag, negative formation, and yet it broke out above that. So I figured that we'd pull back maybe to the top and have a good chance at going higher. So it's looking good now.
Yeah, I would say in the intermediate term, it looks a lot better. Okay, let's head over to oil.
Okay, rising flag. I'm thinking a rising flag is weak. It's not really bullish, and you need. I expect that things to drop out of rising flag. So I could see a pullback to the about 10.1050, and this is just a guess, but that's sort of what I would look at for here. And then at that point, if it does manage to start back up again, you'd have a nice reverse head and shoulders, and you could put a target around a 14, something like that.
Yeah, left shoulder, head. Yeah, that would be good for oil. Yeah, those rising flags are a little bit tricky. They tend to not execute properly.
Okay, the WTIC crude oil is about 50, 54. It's run into some pretty persistent resistance, but as I said, I think there's a good chance that it will move above that resistance, and you notice we've got a PMO bottom, and it's moving higher.
Yeah.
So I'm feeling positive about crude right now.
Yep. I like it. Okay.
So looks like we've got a small head and shoulders formation there, and that declining top slide is kind of tenuous, but it's as good as anything, I guess, at this point. The head and shoulders looks kind of good right now, and I noticed that the daily PMO topped or didn't quite get moving higher. Looked like it was going to bottom, but it didn't, and it's moved lower.
Yeah, even off of a rise, when you think about it, from 119.50 all the way to 120, 125, and we didn't see the PMO turn up. That's not good.
It's a good time to mention next Wednesday is the Fed announcement.
Yes.
I guess that's 2:30 Eastern time is when that announcement comes out.
Yep. that'll be interesting. That could sway things.
Yeah.
All right.
And then
Weekly.
here, I think the dominant feature is that sideways channel consolidation. It's been in there for 2 years. Um, right now, the PMO is implying that its price is going to continue higher.
Mm-hmm. Yeah, I mean, that looks like a flag.
Yeah, it looks like maybe it's gone as high as it's going to go in that channel this time.
Yeah. All righty. And now, bonus. Bonus time. All right, here we go.
Yeah, I initially turned bearish back in January of 2018 because of that crash we had out of the parabolic. And as it turns out, I think the market got juiced by the tax cut kicking in, and they made new highs. Most of the averages made new highs in September and October, but the New York Stock Exchange Composite did not. And that's kind of the way I felt the market should be. I just noticed this maybe a couple months ago, because I don't follow the New York Composite anymore to any great extent. But you can see it entered bear market territory, down 21%, and then there was it's rallied back about half of that, a little less than half.
Yeah.
So far.
Yeah. No, it's pretty interesting because I mean, let me pull up let's pull up a SPY chart really quickly let's do it on this same level here. Oops, that's not what we want. There we go. Just to get a peek, and then we can close things out here. So look at the difference. So we made that high, or the back in January had the correction, but when we came back up in October, I mean, we beat out that high long before.
Right.
And then, of course, it didn't, the NYA, we just were looking at it, not at all.
No, it's just not, it never got close to.
No.
Yeah.
So, yeah.
He was robbed. That's it.
Yeah. The broader market, bit of a problem. So what are you thinking about for next week? What did you tell Mark Young on the survey about what you think is going to happen next week? Bear, bull?
Oh, am I bullish or bearish?
Yes.
I continue to be bearish.
Going into next week?
Yeah.
I am in agreement. I think, this was a nice little rally. We got, a pop after that decline, but I think there's too much overhead resistance. I'm looking for the market to move lower, not at the beginning. I think the first part of the week, I think Monday and Tuesday, we might get a little bit more of a move to the upside, but then I'm looking for a decline by the end of the week. So, all righty. Thanks so much for joining us, guys. Let me close this out then. Yeah, we really are glad that you joined us, and be sure to fill out the survey that is below this the viewer window if you are watching live. As a quick reminder, DecisionPoint does air once a week on Fridays at 4:30 Eastern, and we hope that you all have a great weekend, and we will see you back here hopefully next week. Happy trading.